Ever wondered how you can start investing while still in college? There's a common misconception that investing is a game only for the wealthy or the wise, but that's far from the truth. In fact, starting to invest while you're still in college can be one of the most financially savvy moves you can make. Picture this. Instead of your money sitting idly in a bank account, it's out there working for you, growing, thanks to the magic of compound interest. And it doesn't require a hefty sum to start. You can kick off with as little as the cost of a textbook or a couple of pizzas. Yes, the world of investing can seem complex, but it's not a secret society. With the right knowledge and a dash of patience, you can navigate it confidently. So, are you ready to unlock your wealth through stock investing? Stay tuned. First things first, what exactly are stocks and how does the stock market work? Well, let's simplify it. A stock is a share in the ownership of a company. When you buy a stock, you're buying a piece of that company, making you a shareholder. It's like owning a slice of a giant pizza, where the pizza represents the company. Stocks play a crucial role in the business world. They allow companies to raise money for expanding their businesses, launching new products, or paying off debt. And in return, shareholders get the potential to participate in the company's success through increased stock prices and dividends, which are a portion of the company's profits distributed to shareholders. But where do these transactions take place, you might ask? That's where the stock market comes into play. Imagine a bustling marketplace, where buyers and sellers negotiate prices and make trades. But instead of fruits and vegetables, they're trading stocks. The stock market is a digital marketplace for these transactions. Now let's talk about potential risks and rewards. Like any investment, buying stocks comes with risks. The price of a stock can go down as well as up. If a company doesn't perform well, its stock price may drop and you could lose money. But the flip side is the potential for substantial gains. If the company does well, its stock price could rise, and you could make a profit. It's important to remember that the stock market is not a get-rich-quick scheme. It's about investing wisely and patiently over the long term. Think of it like planting a seed and waiting for it to grow into a tree. You might not see much happening at first, but with time and patience, that seed could grow into a mighty oak. Now that we understand the basics, let's dive into how you can start investing. So, how can a college student like you get started with stock investing? Now that's a question worth pondering. Well, the first step is to start small. Rome wasn't built in a day, and your investment portfolio won't be either. You don't need a fortune to invest in stocks. In fact, starting with a small investment can be a smart way to get your feet wet without taking on too much risk. Think of it as dipping your toes in the financial waters before diving in head first. Next, it's crucial to do your homework. Investing isn't a guessing game. It's about making informed decisions based on solid research. So before you invest a single penny, take the time to understand the company you're investing in. What does the company do? How has it performed in the past? What's its financial health? These are some of the questions you should be asking. After all, you wouldn't buy a car without kicking the tires, would you? The same principle applies to investing in stocks. Now let's talk about diversification. Diversification is a fancy word that simply means spreading your investments around. It's the financial equivalent of not putting all your eggs in one basket. By investing in a variety of different stocks, you can reduce your risk. If one stock performs poorly, it's less likely to sink your entire portfolio. Think of diversification as a safety net for your investments. But remember, investing in stocks isn't a get-rich-quick scheme. It requires patience, diligence, and a willingness to learn. It's a journey, not a destination. And like any journey, it begins with a single step. So take that step. Start small, do your research, diversify your investments, and most importantly, believe in yourself. You have the potential to be a successful investor. You just need to harness it. Remember, every successful investor started somewhere. You can too. What are some strategies to help you succeed in stock investing? Let's dive right into it. First, it's vital to maintain a long-term perspective. It's easy to be swayed by the thrill of quick profits or the fear of immediate losses. However, history shows that those who stay invested over the long haul are more likely to reap substantial returns. Remember, investing in stocks is not a sprint but a marathon, where patience and perseverance pay off. Next up, don't let short-term market fluctuations ruffle your feathers. The stock market is notoriously volatile in the short term, but over the long term, it has consistently moved upward. So, when the market takes a dip, don't panic and sell. Instead, see it as a buying opportunity or hold steady until the storm passes. Moreover, invest in what you understand. This might sound like common sense, but you'd be surprised at how many people invest in companies or industries they know nothing about. simply because they've heard they're hot. Stick to what you know and take the time to understand the businesses you're investing in. This will give you a significant advantage and help you make informed decisions. Speaking of informed decisions, always do your homework. Don't rely solely on tips or hearsay. Make a point of researching and understanding the financial health and future prospects of the companies you invest in. Look at their earnings reports. Check their debt levels and consider their competitive position in the industry. Finally, don't put all your eggs in one basket. Diversification, spreading your investments across different sectors, industries, and even countries can help reduce risk. While it may not guarantee against loss, diversification can provide a degree of comfort when one of your investments is not performing well. With these tips in mind, you're well on your way to becoming a savvy stock investor. And remember, there's no one-size-fits-all strategy in investing. It's about finding what works for you, based on your goals, risk tolerance, and time horizon. So keep learning, stay patient, and happy investing. What are some common mistakes that beginner investors make and how can you avoid them? Let's dive right into it. One of the most common mistakes is investing without a plan. Like a ship sailing without a compass, this approach often leads to aimless wandering and ultimately losses. To avoid this, you need to define your financial goals and then develop an investment strategy that aligns with them. It's all about knowing your destination and plotting the right course to get there. Another common mistake is following the crowd. It's easy to get swept up in the hype of the latest hot stock, but remember, the stock market is not a popularity contest. Just because everyone is buying doesn't mean you should too. Always do your own research and make informed decisions based on your own analysis and risk tolerance. And let's not forget the classic error of letting emotions drive investment decisions. The stock market is a roller coaster, full of highs and lows, and it's natural for emotions to run high. But making decisions based on fear or greed can lead to poor outcomes. Instead, focus on maintaining a long-term perspective and sticking to your investment plan even when the market gets turbulent. Now you might ask, how can I keep my emotions in check? One way is to automate your investments. This means setting up regular automatic contributions to your investment account, thereby reducing the chance of making impulsive, emotion-driven decisions. Also, don't be afraid to seek professional advice. A financial advisor can provide valuable guidance and help you stay focused on your goals, especially during volatile market periods. Lastly, always remember that investing is not a sprint, but a marathon. It's about building wealth over time, not overnight. So be patient, be consistent, and most importantly, keep learning. Avoiding these common pitfalls can help you stay on track towards achieving your financial goals. So, keep these points in mind as you embark on your exciting journey of stock investing. After all, every successful investor was once a beginner who managed to avoid these common mistakes. So, are you ready to take the plunge and start investing? We've covered a lot today. We've learned the basics of stock investing, understood the mechanics of the stock market, and we've even taken those first steps into the realm of investing. We've shared tips for success and common pitfalls to avoid. The benefits of starting to invest while you're still in college are immense. It's not just about the potential financial gains, but also about learning the discipline of saving, understanding the value of money, and the thrill of seeing your investments grow. It's about taking control of your financial future. Remember, the journey of 1,000 miles begins with a single step. Start your investing journey today. Don't forget to like, share, subscribe, and leave a comment below about your investing plans. We're excited to be part of your financial success journey. Thank you for watching.